What if the biggest barrier between the wild world of cryptocurrency and trillions of dollars of institutional money is finally about to be demolished? For years, traditional finance has watched crypto from the sidelines, waiting for a bridge that was safe enough to cross, a bridge built with regulatory steel and not just hype. We've seen booms and we've seen busts, but the two worlds have remained fundamentally separate, like two continents with no reliable way to trade between them. Well, this is the story of that bridge's blueprint. It's the story of how a company called Telcoin is making a historic bid to reshape US banking. And it's about why their plan, centered on a new type of financial institution and a revolutionary bank grade digital dollar, might just be the key that unlocks the future of money. This isn't just another crypto project. This is about an ambitious plan to upgrade the very architecture of banking itself. To get why this is such a big deal, you first have to understand the massive wall that has stood between blockchain and banking for over a decade. On one side, you have the traditional financial system. It's a world measured in the hundreds of trillions of dollars. It's built on institutions that are centuries old, governed by strict rules and powered by legacy tech. It's slow, it's expensive, it has gatekeepers at every turn, but it's also the bedrock of our global economy. It's where your mortgage lives, where your pension fund is managed, and where businesses get capital to grow. On the other side, you have the world of digital assets, the blockchain economy. It's a world of breathtaking innovation, a space that moves at the speed of light. It promises a future of finance that is open, decentralized, transparent, and accessible to anyone with an internet connection. It's given us mind-bending concepts like smart contracts, decentralized finance, or DeFi, and true digital ownership. It's a technological marvel, but let's be honest, it's also been the Wild West, fraught with volatility, scams, and a near total lack of regulatory clarity. For every brilliant innovation, there's a story of a catastrophic failure. For every visionary founder, there's a shadowy operator. This created the Great Divide. Traditional finance, the institutional money, has looked at crypto with a mix of intrigue and terror. They see the potential, but they also see immense risk. The technology is powerful, but the lack of a clear, compliant, and regulated on ramp has kept the vast majority of that institutional capital sitting on the sidelines. The world has been waiting for a safe, sturdy, and most importantly, regulated bridge to connect these two continents. And for years, that bridge has seemed like a distant dream. At the heart of this divide is one of crypto's most important, yet most controversial innovations, the stablecoin. The idea is simple and brilliant. A stablecoin is a cryptocurrency designed to hold a stable value, typically by pegging it one-to-one to a real-world asset like the US dollar. They are the poker chips of the crypto casino, the indispensable tool for trading, lending, and interacting with DeFi protocols without being exposed to the wild price swings of Bitcoin or Ethereum. They are, in theory, the perfect digital dollar. The two giants in this space are, of course, Tether's USDT and Circle's USCD. Together, they represent a market worth over $100 billion and process trillions in transactions, dwarfing traditional payment networks. They are, without a doubt, a revolutionary technology, but they come with a huge catch. For years, these dominant stablecoins have operated in a murky regulatory gray zone. USDT, for example, has faced intense scrutiny over the quality of the reserves backing its tokens. While it has improved its portfolio, its history has left a cloud of doubt. USDC, often seen as the more compliant alternative, faced its own crisis during the 2023 banking turmoil when some of its reserves were temporarily trapped, causing it to briefly lose its dollar peg. These incidents, along with the catastrophic collapse of algorithmic stablecoins, have put regulators on high alert. They see the immense potential for stablecoins to become a core part of our financial plumbing, but they also see the systemic risk posed by issuers that aren't subject to the same rigorous standards as banks. It's this fundamental lack of trust, this need for a true bank-grade regulated digital dollar that has been the biggest roadblock. Investors and consumers need to know that their digital dollars are as safe as the dollars in their bank account. Until now, that guarantee simply hasn't existed. This is where the story takes a historic turn. In a landmark decision, the Nebraska Department of Banking and Finance granted final charter approval for the Telcoin Digital Asset Bank in November 2025. This wasn't just another license, it marked the creation of the first institution of its kind in the United States, a state chartered, regulated digital asset depository institution. This achievement was made possible by the Nebraska Financial Innovation Act, a forward thinking piece of legislation passed back in 2021. The act was specifically designed to create a formal regulatory framework for digital asset banking, establishing Nebraska as a pioneer. Unlike other frameworks, the Nebraska Charter explicitly allows for the integration of decentralized finance (DeFi) services under banking supervision, a true first mover advantage. So, what does being a digital asset depository institution actually mean? It means Telcoin can now operate as a bank built from the ground up to handle both traditional fiat currency and digital assets. It has the authority to take custody of crypto, offer crypto backed loans, and most critically, connect directly to the US banking system, including Federal Reserve payment rails. In the words of Telcoin CEO Paul Neuner, this charter makes history not just for Telcoin, but for the entire US banking system. It's a demonstration that a bank can innovate on the blockchain while operating in full alignment with US regulators. Telcoin didn't just find a loophole. They worked within the system, even helping to draft the legislation, to create a new compliant path forward. The charter approval followed a rigorous 20-month review and a successful $25 million funding round to properly capitalize the bank, proving their commitment to meeting the highest standards of safety. This is the blueprint for the bridge, a government-approved, fully regulated financial institution designed for the digital age. With the bank as the foundation of the bridge, the key that unlocks the gate is its flagship product, eUSD. eUSD is slated to be the nation's first bank-issued on-chain US dollar stablecoin. This single fact sets it worlds apart from the existing stablecoin giants. So, what makes a bank-issued stablecoin so different? First and foremost is the regulatory oversight. Unlike a stablecoin from a money transmitter or an offshore entity, eUSD is a product of a state-chartered bank. This means it operates under the direct supervision of the Nebraska Department of Banking and Finance, subject to the same kinds of rigorous standards for safety and consumer protection that apply to traditional banks. Second is the transparency and quality of its reserves. Telcoin has stated that eUSD will be fully backed one-to-one by a combination of US dollar deposits and short-term US treasuries held in regulated reserves. This isn't just a promise, it's a regulatory requirement. The fiat reserves will be held in FDIC-insured Nebraska banks, and Telcoin plans to provide monthly external audits to prove that every eUSD in circulation is fully collateralized. This is the bank-grade promise, verifiable, audited, and held to a banking standard. Third is its potential as programmable, interoperable digital cash. eUSD is designed to move seamlessly across blockchain networks and, crucially, connect back into traditional payment rails. This creates a two-way bridge where value can flow from a US bank account onto the blockchain as eUSD and back again smoothly and compliantly. This directly addresses the systemic risk concerns that federal regulators have long had about stablecoins that operate outside the banking system. This development is perfectly timed. In 2025, the US government took a major step toward regulatory clarity with the passage of the Genius Act. This federal law establishes a comprehensive framework for payment stablecoins, setting standards for reserves, audits, and issuer conduct. By building its bank and eUSD within a state-level framework that aligns with these federal goals, Telcoin has positioned itself not as a disruptive outsider, but as a pioneering partner in the effort to safely integrate digital currency into the American financial system. This raises a fascinating question. Is a compliant bank-issued stablecoin like eUSD the final evolution of digital money, the key to unlocking mass adoption, or does bringing banks and regulation into the picture sacrifice the core decentralized ethos that made crypto so revolutionary in the first place? It's a debate that's happening right now across the industry. What do you think? Let us know your take in the comments below. The launch of a regulated digital asset bank and a bank-issued stablecoin is a monumental event, but it's only the first step in a much grander vision. This infrastructure isn't just about creating a better stablecoin, it's about upgrading the entire financial system. One of the most powerful aspects of Telcoin's model is its focus on empowering community banks. Over 95% of US banks simply don't have the resources or technical expertise to build their own digital asset capabilities. Telcoin Digital Asset Bank aims to solve this by providing a bank in a box solution, offering compliant and safe access to blockchain based financial products. This could allow smaller local banks to offer their customers new services like yield bearing digital asset accounts, helping them stay competitive. This model shows how digital cash can actually strengthen community bank balance sheets rather than pulling money out of the traditional system. It's a collaborative approach, not a purely disruptive one. Furthermore, Telcoin has always had a global vision, rooted in its deep connections with the telecommunications industry. As an associate member of the GSMA, the association representing mobile network operators worldwide, Telcoin has a unique distribution channel. The goal is to leverage this network to deliver digital financial services to billions of mobile phone users, many of whom are unbanked or underbanked. Their suite of digital cash stablecoins is designed to power an internet of money. Imagine a world where cross-border remittances are as fast and cheap as sending a text message, facilitated by a network of regulated, interoperable stablecoins. That is the future Telcoin is building. This Nebraska bank charter is the key that connects the highly regulated U.S. financial system to this burgeoning global network. It provides the compliant anchor that allows capital and innovation to flow securely between the world of traditional finance and the promise of a truly global, mobile-first financial ecosystem. Of course, securing the charter is just the beginning of a long journey. Launching a new bank is an incredibly complex undertaking. Telcoin will face immense scrutiny from regulators, competitors, and the crypto community itself. They must execute flawlessly, maintaining the highest standards of security, compliance, and transparency to build and maintain trust. The competitive landscape is also heating up. The passage of the Genius Act in 2025 has fired the starting pistol for a new race to build the dominant regulated stablecoin for the US market. We can expect to see other financial giants and innovative fintechs enter the fray, each vying to become a key player in this new financial paradigm. However, Telcoin's unique combination of a state banking charter, a focus on telecom distribution, and a compliant first approach gives them a powerful head start. They aren't just launching a product, they have built the factory. By becoming the first to establish a regulated digital asset depository institution, they have created a template for how to successfully merge the worlds of blockchain and banking. They have proven that innovation and regulation don't have to be enemies, they can be powerful allies. For years, we've talked about the promise of blockchain technology in abstract terms. We've imagined a future where finance is faster, cheaper, and more accessible. But that future has always been just over the horizon, blocked by a wall of regulatory uncertainty and risk. The approval of the Telcoin Digital Asset Bank isn't just another headline in the crypto news cycle, it's the laying of a foundational stone for the bridge we've been waiting for. It represents a paradigm shift from the speculative, unregulated chaos of crypto's early days to a new era of mature, compliant, and integrated financial technology. A US regulated bank is now authorized to issue $1 on the blockchain. Think about that for a moment. This isn't an offshore company making promises. This is a chartered financial institution operating under American banking law. It's the blueprint that finally connects the multi-trillion-dollar blockchain economy with the traditional financial system. It's the on-ramp that institutional investors, businesses, and everyday consumers have been waiting for. It's the bridge, and it's finally here. This is a massive development, and it's going to have ripple effects across the entire financial industry. If you want to stay ahead of the curve on stories like this and understand the future of money, make sure you subscribe to the channel and hit that notification bell. We'll be tracking this and all the major trends shaping our digital future. Thanks for watching, and we'll see you in the next one.